Would you admit it's in a bubble?
Listen, what we've seen recently is certainly a speculative type of frenzy, right? I mean, we're seeing people, Coinbase, adding 100,000 accounts a day. They now have more accounts than Charles Schwab. That, to me, that doesn't necessarily take away from the revolutionary technology, but it's subject to market bubbles and fear and greed like every market is.
And that's why we need to clarify exactly what we're talking about here. Look, as Kelly will tell you, I don't know blockchain from any chain at this point. What I'm concerned about, though, is all the hallmarks of a bubble in place. And I think of the 1990s, for example, when you had any company that would put .com at the end of their name and up went the stock, right? Now you have companies like a little burger chain telling us that they're going to, take payments through blockchain, and their stock goes up by 5,000% or whatever.
But that's not Bitcoin. That's stocks, and that's people being deceitful, frankly.
But the people who are investing in Bitcoin who don't know what they're investing in, that's a problem. You know, look at the price charts that have been.
How many people buy Google and know what their algorithm does?
Google is already an established company. Now, I will tell you, when they first came public, there was a lot of skepticism.
Right.
Okay. But they've proven themselves. And that's a big point to be made here. I think it's a timing issue. Back in the 90s, when a company would come out and be a .comer, you still had a lot of the country that was not online yet, or if they were still doing the dial-up process. And the valuations assigned to those companies' stocks could not be met by the growth of those companies because they were restrained by the infrastructure in place at the time. The same is going on with Bitcoin right now. There's a lot of promise in this, but you don't see the infrastructure in place to justify the valuation.
First of all, you need to separate. Let's separate the stocks, the cryptocurrency stocks or blockchain stocks, from Bitcoin itself. Now, Bitcoin is a currency. Currencies have a very different valuation scheme than stocks. You can't look at them and say what the PE ratio is. The currency markets are trillions of dollars a day. They capture as much value as they need to capture to transfer money around the world. And that's all that Bitcoin is. So to talk about Bitcoin valuation saying it's under or overvalued is like saying if the US dollar or the euro is over and undervalued. We can come up with metrics, but they're probably not that useful. It will capture the value just like gold. If people want to store money in gold, then gold can expand to a valuation to the point that people want to store money in it. Same is happening with Bitcoin.
The Bitcoins are in the hands, a good portion of them, you will acknowledge, in a few hands, okay? And this is a matter of faith. As long as there is faith in the future of this currency or whatever it is, the valuations will hold. But if they lose faith, look out, everybody heads for the exits, right? And that's exactly what happened in March of 2000 when people started heading for the exits when the dot-com bubble burst.
Of course.
It could happen again.
Same thing happened in 2007 when the housing bubble burst.
Okay.
But these are human emotions. This is fear and greed. It has nothing to do with Bitcoin, the technology.
I'm telling you, 20 years ago, there was a lot of promise about the internet, and look at it today. It's huge, okay?
Yeah, exactly.
The same thing
so why wouldn't you want to be a part of that?
Because it's not there yet. It's not cooked. It's not soup yet.
Well, but that's new technology, of course.
There are people investing in it who have no idea what they're doing.
But of course, that's always the case in any market. In any market.
Exactly.
I mean, that's why we have this whole TV program, right? To educate investors and to tell them what's going on with stocks that they should buy. That, again, has nothing to do with Bitcoin. Now, if I'm looking at blockchain technology,
Can I just ask you one question? Would you ever recommend somebody buy a currency based on its value?
A currency like the US dollar or the euro? I mean, I trade currencies for a living, so yeah, I guess I would, sure.
Is that because you can assign it a fundamental value, or you just think you can identify trading ranges?
I think I could do both, right? I mean, I think there are periods of time in currency markets, fiat currency markets, where things are egregiously over or undervalued, and you can
based on, for a currency, it might be relative interest rate.
Yeah, like purchasing power parity and that
Bitcoin,
type of thing.
What are those fundamentals?
Well, the fundamentals really, Bitcoin is a network, right? So one of the fundamental things that I use is the number of transactions that are happening. And if you use something like Metcalfe's law, a derivation of that, what the value of a network is, when you start to see transactions go up, then that means that more people are using the network, therefore it's more valuable to people because more people are using it. It's no different than
value currency the same way.
You could value a currency the same way. Sure, why is the U.S. dollar more valuable than the Swiss franc?
Has a fiat currency ever gone from 8,000 to 20,000 in a few weeks as people bought it by Coinbase on a credit card?
No.
I think that's what the currency thing breaks down.
Yeah, but I mean, like, we're also talking about, in 1790 when the U.S. dollar came out, what was the price then, right? I mean, again, you're talking about speculation, which happens in every single asset class.
Bill.
This is not blockchain technology and Bitcoin. This is a disruptive technology that people should, as an investment, have 1 to 5% of their investment in this. They don't need to put 100% of their net worth, but this is a fundamentally disruptive technology that is going to change the way that we send money around the world.
Bill, are you convinced?
Of what?
Yeah, you tell us.
I am convinced of my position, and I think Brian agrees with me. We kept saying, that it has all the hallmarks of a bubble, which disruptive markets tend to do as they are in their nascent period, which is what this is. And you're going to have those people who get in to make a quick buck who lose their shirts because they didn't understand what they were investing in. And that's, I think, where we are in this process right now.
Possibly, but again, that happens every single day in every single stock. Yeah. People buy penny stocks because they want to be millionaires. All right, so there's more to this, and it's such a small market that there's so much more upside to this.
I'm arm wrestling you. Come on, I'm taking you on. Come on.